Okay, good evening, guys. Before we start, as always, let's read the risk warning. Spread betting and safety trading both carry a high level of risk or capital, the possibility of losing more than initial investment. These products may be suited for all investors and will intend for people over the age of 18. Please ensure you're fully aware of the risks involved and necessary to seek independent financial advice. Again, education only. The content of this webinar is a personal opinion of the moderator, not Intro.com. The content does not constitute financial, investment, or tax advice. We recommend you discuss your specific requirements with an independent financial advisor prior to entering any bet. Intro.com is not responsible and claims all any liability for consequences during this session. Okay, so let's talk about tonight an introduction to risk management and how you manage your money. So the key to successful trading is quite easy. It's the biggest reason people don't make money in trading. It's very, very simple that people let the losses run a lot more than they do the profits. It sounds obvious, it sounds very, very simple, but it really isn't. People get emotionally attached to their trades. They can't pull out of losers, they can't realize the loss. And that's what really makes it very, very difficult to trade objectively, because you take all these things personally and you lose more money when you know you're wrong. It's very, very easy to hold on to a trade and you make money and you think, well, I'm just taking profit, I'm banking profit. It's very, very difficult to get out of a trade when you know you're wrong and you've already accepted you're wrong and actually cash in that realized loss. So being a disciplined trader is very, very easy to understand, but it's very, very hard to do. So you want to be that type of trader. You want to be a disciplined trader and not a rogue trader. When you hear about the traders that lose all this money, like the guy from UBS and Nick Leeson, it's always when they're caught out. It's never when they've made lots of money. So being a successful trader, being that strong, successful trader is always the most difficult part to be. And it's very, very easy to think that trading is all about making money and take things very, very personally. And it's not. It's about being objective, taking the emotion out of trading, taking yourself out of the situation, and getting out of trades when it's wrong, and staying in trades when it's right. So a simple statement. If you don't want to make more money on profitable trades than you do on losing trades, in the long run, you're definitely doomed to failure. So the reason for holding unsuccessful trades is number one, it's fear. The fear of losing, keeping hold of that, cashing out, pressing the button, admitting you're wrong. It's a very powerful thing. People don't understand how difficult it is to get out of a losing trade. Now, number two is just poor rules. People don't put the stops in place. They don't put the exit levels in a realistic, also manageable place. There's absolutely no point at all in putting stops so far away from the market or your entry point that you're never going to get stopped out. That's not the whole point of stops. That's not the point of trading. You need to keep your stops relevant. They need to make some sense in your trading strategy. If you keep your stops so far away that they're never likely to get hit, there's no point of stopping in the first place. So make it all relevant. Keep them in play. Put them close enough to your trading entry point that if you get stopped out, you're giving you trade enough time to do what it needs to do, but B, also enough time to to hit your stop. And if your stop's going to be relevant, it needs to be stopped out for a good amount of money to get you out that trade, but then also a good amount of money to warrant putting the trade in the first place. You're never going to make free money. There's never going to be a guaranteed profit. There's never going to be a risk-free trade. So make sure your stop has some relevance in order to make it part of your actual strategy. Also, fundamental news. Not being aware of fundamental news is quite important. A lot of people think they can fade news. I'll trade non-farm payrolls tomorrow, so you can watch me trade actual news events. If you're not aware of it, you can certainly get stopped out. The market's coming very, very quickly, very aggressively. If you're not aware of the fundamental news going out, then you're going to be at a disadvantage. So just having the wrong opinion. Quite often we have stops in place and we trade because we want to. Very, very easy to put a trade on because you can basically justify it for anything. It's an impulse trade. It's based on a technical indicator, fundamental news. But if you don't manage how you do this, then eventually you're going to get caught out. So you're going to get stopped out for no reason. So what is cash management? What is risk management? It's all the same thing, to be honest. Managing your capital is the most important thing you can do as a trader. Once your money's gone, it's very unlikely you can put in the same amount of money and carry on trading. So one of the biggest mistakes people make is that they don't manage the money, they don't manage the ability to stay in the game. One of the biggest things I learned as a trader is it's very, very easy to put high-risk trades on and make the big amount of money. It's very, very hard to bank and cash them losses. So it doesn't matter. If you're not in the game, you can't make money. So if 9/11 happens again and you don't have the money in your account to trade, you can't make any money. It's just as simple as that. So these things you need to really, really be aware of and fully understand. Capital's king. By its very definition, it gives you it's the most important asset you're ever going to have as a trader. It gives you the confidence, but it also facilitates the amount you can trade and how often you can trade. So it's not like fixed odds betting. If you bet X amount of money, that's all you can lose. Okay? When you bet with on leverage and on margin, you can lose every point as much as you stake. So it's very, very, very important again that you understand this, because you can lose a lot more than you initially outlay. So act like a pro, even when you're a novice. All these things are very, very important. Just like anything you can learn in life, that you have to understand that when you trade with money, that you're betting, you're instantly showing your hand. So it's not like poker where you can take a step back and only raise when you know you've got a good hand. You're involved in the market or you're not. So begin as you mean to go on. Follow the 4 steps I'm going to talk about. Okay, avoid excuses. Remember, the market is never against you. It's very, very important that you understand that the market isn't against you. Right? Now you can take this on board in many different ways, but the market is not against you. It's not taking you personally. It doesn't have a camera against you. All these things you have to understand. Right? Very, very importantly, don't let the market control you. Right? Accept that you're not going to get the market right all the time. Accept you're going to have losses. When you do this, you're in control of your market management. So I believe there's 4 simple rules of trading. It's all based around preparation. Every seminar I hold, everything I do is all based around preparation. It gives you the confidence, it gives you the tools to get involved in the market and not get caught out. So look at your entry level, look at your target level, look at your stop level. All these things will help you in the long run. So your preparation. You can't just ever log on and trade. If you want to be in control of your cash and money management, you've got to be prepared. You know, if you just turn on your screens, buy or sell, how prepared are you? Right? Don't just log on, don't just press the button. Understand what the currency pairs have done overnight. Check the overnight fundamental news. Has the markets moved as you expected? What else has happened? What's the fundamentals done? What data is coming out today? What do you expect? What do you expect the markets to do? You know, again, look at your charts, look at your technical levels. Right? What, you know, the value of weekend analysis. Very, very important when the markets are trading. You're caught up. You might have a position on, you might not have a position on. But you have that ability. When the markets are closed, you don't have the ability to trade. So you've got a good 2 days in order to stay at the markets. So weekend analysis. Use this weekend analysis to review the past week's trading activity. If you're looking at involving yourselves in the markets next week, again, you know you don't have any positions on over the weekend. So you can take all your views objectively. You know, again, you're not involved. You don't have a position long. You don't have a position short. You're very objective. This is quite an important thing to do. So plan for the week ahead. Look at data releases. Look at your speakers. Look at your events. Like tomorrow, with non-farm payrolls. Why would you trade tomorrow morning? There's that whole opportunity to make money. So be firm on your opinions. Understand your views. Understand what you can prepare for. This is all part of cash management. Being prepared for what's going to happen in the markets. There's absolutely no point in being surprised at anything by trading. We have economic calendars that tell us the speakers, tell us the events. We just turn up to trade, and there's new news out. And that's an advantage to us. That's a benefit of being a live trader. You know, if 9/11 happens all over again and we're live trading, we know what to do. If we're not, we're just trading normal scenarios. We should know what's going to happen. We've got scheduled. That's what's important about being a trader, being prepared, being understanding of what news can move the markets. It's your entry level. So remember, depending on your style, working at your entry levels can really, again, preempt market moves. You can be more than dynamic. You can be a swing trader, you can be a momentum trader, you can be a position trader, a scalper, it doesn't matter. But understanding and being prepared as well, how far the market's going to move, that's what means. You involve yourselves in the market. If the market's in a range bound between 15 ticks, and that's all you do, then how can you accept to be a trader? Be a breakout trader, be a momentum trader. If there's no momentum to trade, then stay out of the markets. That's the other thing that traders forget. Trade the market sentiment, trade the right kind of conditions. There's no point trying to make the market do what you think it's going to do. It can't. It can't possibly do it. So the momentum, if the volume isn't there, then perhaps stay out, don't trade. So think about the market might do in response to a figure. Is it over a bank holiday? Is it over a public holiday? All these things can affect when you trade figures. Remember, one of my absolute key rules is 80% of the time the markets will retrace 50% of the initial move. So you don't need to chase it. I've got a Bollinger Band Fibonacci tool that I use all the time. It's amazing how well it works. Yeah, when we break above volatility, the market will always look to retrace 50% of initial move. So you don't have to chase it. That's a really, really important thing to know. So again, target level. Very much like your stop level and your entry level, your target level is have a defined place to aim for the trade. Understand the market's going to be primed for a big move, or is it a sucker move? Understand where you want to get out. Where's your maximum profit? Don't be greedy. If you've got the back of a good move, make sure you take out some profit. You can scale out, you can take half your position out, do anything you want. Make sure you don't leave money on the table. Take that money out of the trade and make sure you keep hold of it. Okay, so when you've also got that level in place, stick to it. Take some money out at that point. Don't just think your trade's going to run forever. Because again, when you're involved in the extremes of the market, it can reverse and it can take away your profit quite quickly. So the market's always going to push further. So if you do want to take some profit out, that's fine. But make sure you've given yourself that out, that edge. Your stop level. Again, this is the big one. And it really should be the first of the four rules, to be honest. But again, it's just like anything in trading. We always aim to make money out of trading. We always aim to get out for profit. But sometimes we can't do that. So we have to understand where our stop level is, where we have to get out of the market, where we're wrong, where the market's gone against us. These things we have to be very, very careful about. So where do you get out of the move? Where do you get out when the market's telling you you're wrong, when it's gone too far against you, or it's gone too far against the trend, when it's gone to your levels of support and resistance? All these things that happen against you. What can you do? People always ask me, it's all about really risk-reward. If you want to talk about cash management, risk management, what it's all about, it's all about risk-reward. So if I say I've got a £10 bet, and I've got a dead cert horse at 10 to 1, everybody really will put £10 on that because they win £100. But then again, if the odds come down and it's 3 to 1, that's a little bit less exciting. What about 1 to 3? We put £3 on to win 1. Well, it's not that exciting at all. So I don't like to talk about trading as a betting parallel, but it's all about risk reward. You want to put on enough money in order to make money from this arrangement, and that's what it is. You're getting involved in the markets. You're putting money on the line in order to make money in return. So why would you put a little amount of money on to lose money? You wouldn't. Why would you put a lot of money on to lose a lot of money? You wouldn't. It's about keeping the balance all the right way around. So it's all about keeping a ratio, I would say, about 3 to 1. Risk one amount to make 3 times profit. Otherwise, in the long term, you really are doomed to failure. So as I say, maybe the right strategy is 3 to 1, or maybe 1 to 2. It really depends how tight you want to be. 1 to 2 is the absolute minimum you can use. I would say generally in my experience, 1 to 3, or maybe 1 to 5, I would really say. So the basic ratio is you want to risk £1,000 to make 2, then risk £1,000 to make 5. Okay, it's got to be relevant. And in tick terms, if you're looking to make 60 ticks, then place your stop 20 or 30 ticks from your entry point in order to protect yourself. There's no point trying to make money from nothing. That's why beginners lose money. People lose money in the beginning because they let the positions run deeper than they do winning trades. It might sound completely illogical, but it happens all the time. So keep this in mind. Every time you see the markets move in an aggressive way, they know they're getting people out of losing positions. Okay? So it's very, very important to understand when we see markets moving aggressively, they're not just winning trades, that's people getting out of losing trades. So that's why the markets overextend and move in a quick direction. If you ever see a big candle with a long wick, that's people getting out of trades. It's not trading, it's people getting out of trades. That's how you can understand volume and market volatility. And why use stops? Well, stops are used for a number of purposes. They protect your capital. Okay? Again, they're one of these things that they don't have to be right. You can be stopped out and still make money in the long run just by having a stop in place. A stop is just a matter of where the market's moved against you, against your ratio. Right? There's nothing wrong in trading sometimes with being wrong. And excuses. My big thing is with trading is that we all know when we're wrong. We all know when we've been stupid, we've been too arrogant and been too aggressive. You know, I got stopped out of the market and then the market went exactly where I thought it was going. In my trading terms, you know, my risk management days when I was a professional, that translated into my entry point was wrong. I misjudged the entry point to where the market could go before it went where I thought it was going to go. So all these things you have to understand and put into place. The market's always going to move. It's always going to have that volatility. So in conclusion, risk management is the art of balancing profit expectations versus manageable losses. Don't expect to get the market right all the time. It won't happen. Factor losses, factor risk into your whole trading equation. Make sure you achieve 7 out of 10 winning trades, and your 3 losing trades can't be more than your 7 winning trades. Otherwise, you know, you're going to sustainably lose money. All these things are quite simple in trading, but if you don't do it, they've got to really catch up on you. Alright guys, it's quite a short presentation, that, to be honest. There's not a great deal for the introduction that I can bring in. If you want to learn about risk management and how to manage a trade, then watch me at 12:30 tomorrow, trading off on payrolls. I'll back up what I say real time. Any questions, guys? Anything you'd like to ask? I'll put my email address down just in case. Anything you'd like to ask at all, guys? Any questions? Do you want to watch me trading off on payrolls tomorrow? It's pretty good. There's again, a lot of my experience goes into this. Oh, sorry guys. I'll just put the instant poll down for some feedback. Is there anything you'd like to ask about future courses or anything else you'd like to ask about trading in general, guys? Again, just let me know. Is there anything I can help you with or be of assistance? Just please let me know. I mean, non-farm payrolls will be good tomorrow. You know, again, it's something I can put all my education into real time situations, and I generally make money, guys. So hopefully, we'll be able to do that. Right, guys. Well, there's no other questions. We can just call time on that tonight. These sessions don't always have to be long. I'll be presenting as of 12 o'clock tomorrow, so please just join as normal. It's just through Novia, as always. Okay, Tess was asking the question, what's the best way to work out your stop? Well, again, it's from your entry point. So again, use the ratio. If you want to make 50 ticks, then put your stop 20 ticks away from your entry point. Make it a ratio, make it a physical ratio. That's the best way of using stops, in my opinion. How do you understand charts? Well, unfortunately, that's just time, I'm afraid. It's time and understanding candlesticks. That's the main one. Understanding candlestick formations. I run a presentation on that. But also just understanding how markets move. There's no quick way. There's no easy way. Well, they can be as complicated as you make it, I'm afraid. There's no quick shortcut to understanding charts or any kind of technical analysis. So really, you just have to bear with it and learn. Listen to all my webinars, watch me live trade. All these things are what you need to do. Yeah, well, candlesticks, yeah, absolutely, Dean. Well, I do a full advanced candlesticks charting package on InterTrader, so you can watch me on that. There's no better place to learn than that, I'm afraid. I don't want to sound big-headed, but it is. It's the best place. This is 10 years of me trading, and I've made more money than any other educator I know. That's why I do this stuff, because I don't have to trade anymore, but I also do. Oh, I don't know, Hitesh, that's a tough question. What do I expect from non-farm payrolls tomorrow? It's going to move the markets. That's what I expect. Yes, absolutely, Dean. I've already done the advanced candlesticks. That's recorded, so you can certainly watch that on the recorded seminar. Definitely. But again, come watch me, guys. Come watch me do it live. There's nobody I know that puts their own money online to back up the trading education, so that's another real key skill that I give to the markets. Alright guys, well if nothing else, it's been an absolute pleasure tonight, and join me for tomorrow for non-farm payrolls, a real live trading event, and it's been great. I hope we've learned something today. Alright guys, take it easy, see you soon.